In late June 2026, Apple quietly raised prices on every Mac, every iPad, and the Vision Pro. MacBook Air went up $200. MacBook Pro up $300 to $400. Tim Cook told the Wall Street Journal that component costs had never risen this fast, and price increases were unavoidable. Then Bloomberg and the Financial Times broke the real story. Cook had personally gone to Treasury Secretary Scott Bessent, not to complain about prices, but to ask for something much more sensitive. Apple wanted to buy memory chips from two Chinese companies that the Pentagon had just put back on its military blacklist, CXMT and YMTC. The moment that news hit, Micron dropped 5%. SanDisk dropped 14%. Think about what that means. The most profitable company on earth, $112 billion in net income last year, went to the U.S. government and said, "We need chips from companies you flagged as tied to the Chinese military. Not because we want to, because we have no other option." This video is not about whether Apple should or shouldn't buy Chinese memory. It's about what pushed them to that point, and what that tells us about where the global chip supply chain is actually heading. The company at the center of Apple's ask is CXMT, Changshin Memory Technologies. Most people outside the semiconductor industry have never heard of it, but the numbers from its IPO filing tell a story that's hard to ignore. In the first quarter of 2026, CXMT reported revenue of 50.8 billion yuan, roughly $7.5 billion. That's a 719% increase from the same quarter a year earlier. Net profit attributable to shareholders hit 24.8 billion yuan, about $3.6 billion. In a single quarter, that's more than China Mobile, more than CNOOC. And this is a company that was losing money as recently as 2024. Its global DRAM market share climbed from about 4% in mid-2025 to 8% by Q1 26, making it the fourth largest DRAM maker in the world. Monthly wafer output roughly tripled, from 100,000 wafers in early 2024 to around 300,000 today. That puts it just below Micron in raw capacity. The customer list is no longer just Chinese smartphone brands. HP, Dell, Lenovo, Acer, and Asus have all evaluated or adopted CXMT memory. Qualcomm confirmed during its Q1 earnings call that it's in a qualified state with CXMT. Tencent just signed a multi-year server DRAM supply contract worth over 20 billion yuan, and CXMT's IPO, targeting 29.5 billion yuan on Shanghai's Star Market, is set to be the largest Chinese tech listing of the year. This is not a company on the fringes anymore, but those numbers, as impressive as they are, don't tell the full story. Here's the thing almost no one is talking about. CXMT's profit explosion looks like a technology breakthrough. It isn't. It's a pricing event, and every major memory maker is experiencing the exact same thing. SK Hynix reported that its Q1 DRAM bit shipments were roughly flat quarter over quarter, but its average selling price jumped by the mid-60% range. Samsung's average memory, ASP, surged 146% compared to its full year 2025 average. CXMT's bit shipments grew just 11%, but its ASP rose 57%. Across the entire industry, the pattern is the same. Volume barely moves. Prices explode. Why? Because Samsung, SK Hynix, and Micron have collectively redirected the vast majority of their advanced production capacity toward HBM, high bandwidth memory for AI data centers. Every bit of HBM consumes roughly 3 times as much wafer area as standard DDR5, and HBM generates 3 to 5 times more profit per wafer. No rational company would choose to make commodity DRAM when it could make HBM instead. So they didn't. That created a structural squeeze in the conventional memory market. Not because demand disappeared, it grew, but because the supply side physically shrank. And CXMT, a company that puts nearly 100% of its output into conventional DRAM, was standing in exactly the right place at exactly the right time. But the technology gap is real. CXMT manufactures on a 16-nanometer process. Samsung, SK Hynix, and Micron are on 10-nanometer class nodes. For the same DDR5 chip, CXMT's die is roughly 40% larger than Samsung's, which means fewer chips per wafer and a higher cost to produce each one. And in CXMT's entire 29.5 billion yuan IPO filing, there is not a single mention of HBM. 99% of its revenue comes from dairy and LPDDR products. In today's supercycle, none of that matters. Prices have risen so far and so fast that CXMT's cost disadvantage is invisible. But the memory industry has a long history of supercycles that end. And when they do, cost structure is the only thing that matters. If you want to understand how confused U.S. policy is toward Chinese memory, just look at the timeline. In early 2025, CXMT was added to the Pentagon's Section 1260H list, a roster of companies the Defense Department considers linked to China's military. YMTC had been on the list since 2024. Then, in February 2026, the Pentagon published an updated version of the list. CXMT and YMTC were removed. Within hours, the entire document was withdrawn. No explanation given. Reports later suggested the White House was furious that someone at the Pentagon had taken them off. On June 8th, the official version came out. CXMT and YMTC were back on the list. So were Alibaba, Baidu, Baidu, and Tencent. Less than 3 weeks later, Tim Cook walked into Treasury to ask for assurance that Apple could buy chips from 2 companies on that very list. Here's what makes this so unusual. The 1260H designation doesn't actually ban private commercial transactions. Apple doesn't legally need permission to buy from CXMT. What Apple is afraid of is escalation. That after signing a multi-billion-dollar supply contract, Washington could move CXMT to the Commerce Department's entity list, which would make the deal illegal overnight. Cook isn't asking for a license. He's asking for a promise that the rules won't change after he's already committed. Congress responded immediately. The chair of the House Foreign Affairs Committee called it a grave mistake. But Apple's position is straightforward. This isn't a choice. Samsung, SK Hynix, and Micron have redirected their output to AI. Conventional memory prices have surged 55 to 60% in early 2026. The chips Apple needs to build iPhones and MacBooks are physically not available in the quantities it requires, not at any price. And CXMT is one of the only companies in the world actively expanding conventional DRAM capacity. So let's step back from the headlines and ask the structural question. CXMT is not about to become the global memory champion. The math doesn't support it. Samsung's remaining conventional DRAM capacity alone, after subtracting everything it allocates to HBM, is still nearly double CXMT's total output. The big three still controlled 91% of the global market. In the highest value segment, HBM for AI accelerators, CXMT is 3 years behind, and its own IPO filing doesn't even mention HBM as a product line. But something more interesting is happening beneath those numbers. The memory supply chain is fracturing into 2 separate ecosystems. On one side, the US-Korea HBM corridor, SK Hynix, Samsung, and Micron, tightly integrated with TSMC's advanced packaging, supplying NVIDIA's Rubin platform and the Western AI infrastructure build-out. The technology moat is deep. CXMT cannot enter this world. On the other side, China's domestic memory ecosystem, CXMT and YMTC, supplying Huawei's Ascend AI chips, Tencent's cloud servers, Alibaba, ByteDance, Xiaomi, and the entire Chinese consumer electronics base. Tencent's 20 billion yuan long-term contract is not just a purchase order, it's a supply chain commitment. Once these customers complete qualification, integration, and inventory planning around domestic memory, they're unlikely to switch back, even if Korean prices eventually come down. Apple is standing in the middle of that fracture. It wants chips from both worlds, and both worlds are telling it, you can't have that. If AI demand keeps accelerating, the Korean manufacturers will never move HBM capacity back to conventional DRAM. The fracture widens. If AI demand slows and Korean capacity returns to the conventional market, CXMT's cost disadvantage gets exposed. But by then, China's domestic market may have already rebuilt its supply chains without them. Which of those futures is closer to reality isn't something 1/4 of earnings can answer. But the fact that Apple, of all companies, felt compelled to walk up to a Pentagon blacklist and ask for chips, that tells you the fracture isn't hypothetical. It's already here.